actionable, investable, and honest. I'm Greg Greenberg, and this is Buy This, Sell That. Let's make it profitable. Howard Hansen, one stock that you rate a buy is Brown Shoe. What's the catalyst to get this shoe retailer moving higher?
There are a number of catalysts, but this is a company that actually personifies what we do. It's a business that's been around for a long time. Its profitability is depressed. One of the things we think is very important is to have a business whose profitability is going to be improving as time goes forward. And we think it's usually easier to start with a company that has a depressed level of profitability that then can go back to its average profitability level. With Brown Shoe, we have that. Profits right now are about 2.5%. They've been depressed over the past couple of years for a couple of reasons. But we're very excited that new CEO, Diane Sullivan, who's come in, is repositioning the business, making some acquisitions, and taking what is really a 2/3 retail with the famous footwear chain, combining it with 1/3 branded shoes like Via Spiga or Sam Edelman that you may be familiar with, or maybe Dr. Scholl's, and taking those and actually building the profitability with some operational as well as strategic positioning reasons. We think profits should probably, operating margin should be north of 5%, and if that's the case, we're going to earn close to $2, and this $9 stock could probably be somewhere in the 20s.
You're also a buyer of Avon. This stock spiked on the Coty bid not too long ago. How much higher can it go?
Avon's a great case of a company that stepped on a rake, but in their case, multiple rakes. So what they ran into is some problems with ERP system in Brazil, a little bit of problems with in China, the bribery cases. And really what that ended up doing is creating a situation where the stock was very cheap. We bought it first before the acquisition announcement was made by Coty. And what we saw was a business that has a global presence, strong brands, and an opportunity to take product and sell it around the world. With that as the case, I think probably $2.50 is kind of a normal level of profitability for Avon. And when we were buying it, we thought one of two things would happen. Either they'd get their act together, profitability would begin to improve, or the board would take strategic action. Fortunately, we've had a couple of things. The board has taken strategic action, the CEO is new, and we have Coty bidding at the door. So if I look at this one with a $2.50 type normalized earnings number, I think a stock somewhere in the mid-30s would reflect its true value.
You're also bullish on CenturyLink. They pay a 7.6% dividend. Is this dividend safe? Do you want to keep buying this stock?
Absolutely, the dividend's safe. It's about 50% of the free cash flow. CenturyLink is a great contrarian position for us. It's a business, it's now the third largest telecommunications company in the United States. They bought a number of different businesses, combined them together, and what we think is everyone's looking at the wrong metric. They're all focused on access line losses, where the real opportunity for this business is to grow the business side. We think that in a couple of years, we're going to have a situation where the revenue starts to grow, and by combining a number of telecommunication companies can trim profits out, my profitability begins to rise, my revenues begin to rise, and people say a 7.9% dividend is too high. Let's put a 4%, which could mean a double in this stock.
Those are three buys. What stock or sector would you sell right now?
Because of the way the Lindy Hansen contrarian value strategy approaches the market, we're always looking for businesses that are under-earning with an opportunity to improve. One sector that we look at very hard, but we haven't found anything that really entices us, is the financial sector, mostly among the mid-cap banks. Because when we look there, we say that historically these things were earning a mid-teens to 20% return on equity. We think people expect them to go back there, and given the new reality of re-regulation within financials, it's not going to happen. So you should really be thinking about a high single-digit ROE, and in that case, these stocks really aren't that attractive.
This market is
stock pickers market.
Stocks have rallied this year.
We're coming into a Monday where we're going to